$693.07. That's what we made week 2 trading. All of it's going to the wife's brand new Subaru. It was a good week. We're going to do a quick week 2 recap. That's not really what I want to talk about here. What I want to talk about is what happened yesterday on Friday. And for those of you guys who watched the other videos, since no one's watching this right now, how my mind works is my weeks for trading are Friday to Thursday, because all my spreads are sold for the next day, and on Fridays I roll all my cash secured puts to the following week. So I go by expiration days for profit, not the day I actually make the trade. So but yeah, so we'll just get into a quick week 2 recap. Last Friday, all our rolls in SPX puts were credit spreads were 164.15. On Monday, 214.57. On Tuesday, 114.52. On Wednesday, 116.37. And on Thursday, we had a light day of $83.46. So like I said, that brought our week total to 693.07. So now we get into Friday. What a crazy day. I had to break glass to protect myself. I don't like doing it, but I've set up my account structure to where I can do this on because I mean, for those who don't know, or if you do know, Friday's crazy. We were down, SPX ended up down 2.64%, which is insane. It's like a twice a year thing to go down that much. The selling price, I mean, it just, the whole time, we never got a bounce, we never got a relief, and that's what kind of screwed me. Which, you know, it's one of those, it was bad trading, but you know, you trade the environment you have, and the environment we have is a bull market where we get the bounces. I wasn't even looking for a crazy like bounce to go green. I was just looking for a relief bounce to get out of my spreads for cheaper, and we just never got that, and it just got ugly. I mean, NASDAQ, if you count the post-market trading after the bell on Friday, you get another 4 hours of trading. NASDAQ ended up down over 5%, and I think SPX ended up down over 3%, or right at 3, or pretty dang close to 3. So insane day. So we can kind of go over quick what we did outside of the SPX, and then we'll go over what happened on the SPX. And like I said, I'm full transparent here. I'm not perfect. I make mistakes, and this is what happened. So on Friday, we had, so like I said, we got assigned on Wednesday the 37Cs, or we sold a 37P for Wednesday expiry on IBIT, Bitcoin, and we got assigned that. So we sold on Thursday, we had sold the 37 call for Friday. That was going to expire worthless, so we rolled that to the 37.5C for next Friday. We got paid $22.31 for there, and then we also, you know, if we do get a nice bounce, if it ends above 37.50, we're actually going to get an extra $50 just on the baseline there. And then we had the 35.5P that we had sold Wednesday for Friday's expiry. That would have expired in the money, but we rolled that out to next Friday down to a 34.5P. So we got 22.66 there. Palantir, we were sitting on the 136P for Friday, and we rolled that to the 125P, and we got 34.31. MSTR, I had the 115P. If I held it, I would have been fine. It would have expired worthless. I got nervous, especially I don't like MSTR. I trade it because the premium's high, and I sell way out the money call puts on it, cash secured puts, and you'll see I rolled it all the way from the 115 to the 65P, and I made 1031. That was more of a throwaway trade, and I did that because I didn't want to take any risk after what I had to do to get out of my SPX spread. So if MSTR drops from I think it closed at like 119. If it drops from 119 to 65 next week, I will gladly take the $65 shares and sell them at the money for a week and get a couple $100. But that was more or less just to protect myself. I didn't need to do it, I guess, but there's still 30 some minutes left in the day for trading, and so I just wanted to protect myself, so that's what we did. Hood, we rolled the 77p down to the 70p. We got $49.31 there. Our Sox X coming back with that red day. Sox X was up like 20 some percent. 30, it was great. That was the only good thing about it. Our 12.5 Cs we rolled flat. We got 846 for that, and our 8Ps we rolled that flat a week. We got 1066 for that. So that was all the non-SPX trades. Well, then how we fixed what happened with the SPX. So Thursday, for Friday expiry, we had $4,000 worth of risk. We had the highest strike, short strike, was 74.85. So we had a 74.85 and a 74.80 credit put spread. That was freaking 1.3% off spot. It was only 5 wide, so we got paid $15 for it or whatever. And then we had 74.55 short and a 74.40 long, so that was 15 wide, so $1,500 worth of risk, and that was like 1.7% off a spot from Thursday close. And then we had two 10 wides. They were 73.80 and 73.70, so those were like almost 2.5. Yeah, no, they were like 2.7% off a spot. We breached those. Like, that's how insane the day was. So how it happened, how it played out for me is we went down and we got a slight bounce, and we were down to 7,500 flat, somewhere in that range. We got a slight bounce up 20 points. I got nervous with that 74.85 to 74.80. I bought it back for 50 cents. My 74.55, 74.40 spread was at 50 cents. So basically I just rolled it. So I bought that one back. I sold another 15 wide. So I tripled my risk for even credit. But in my mind, it's like, it was straight down. Like, I'm like, my hope was, hey, we get a bounce, then these become worthless, and I can buy them back, real cheap, or just let them expire worthless. No, we just kept going down, So then, we were down to 74.60, I believe, and we just kind of hung there for 20 minutes, and I knew it was going down. So I bought those back. I can't remember what I bought back, but anyway, I sold enough of my 73.80 and 73.70. So I ended up having, at that point, so I bought those back. That was $3,000. So then I had to put on $7,000 of risk to get enough credit to offset that. So then now I got $9,000 total risk on the strike. So 73.80 short, 73.70 long. And yes, in theory, if I held it, I would have been fine. But we breached it. And we breached it bad. Like, we didn't just like touch and go. Like, honestly, I think we even breached I'd have to go back and look. I think we even breached my long strike. Like, that's how crazy it was. So we got down, and honestly, at that point, after I rolled down to that one, I was like, just give me a 30-point relief bump. Let me buy back. I'm going to take a loss, but let me buy back those spreads that I sold on the rolls. And I'm just trying to minimize my loss, right? And that's all I was hoping for. And we never got the bounce back. And we technically got the bounce back, but it was after we already breached my strike, and you just can't take that risk. So then at that point, it was like, okay, I can't just eat all this. So I had two options. I had to take the $9,000 of risks that I had, roll down into Monday, and only roll down, put on 15K of risk and roll down 2/3 of a percentage point, and now have 15K of risk 2/3 of a percentage point off of spot, which I couldn't take that risk because I've seen, if this was on Friday, if there was like, okay, the jobs report came in strong, and then all of a sudden they're like, oh, they're actually gonna hike rates, they're not gonna cut them, which I don't think they're cutting rates, but they're not gonna hike rates unless inflation really ramps up. They're not hiking rates. They're not repeating. They already said, like, I don't know where these idiots are saying that they're gonna hike rates. They've already said they don't want to repeat the 70s. And what happened in the 70s is they raised rates, then they lowered them, then they raised them, then they lowered, and it's like the back and forth. It's just too much. It's just too much. So they're just going to hold steady. Anybody with a brain knows this. And maybe, I don't know, that's why. Like, I'm not sure on the selling. Normally, so like if this was a geopolitical event, say Iran was like, oh, screw you guys, we're bombing Israel, and the market went down on that, then I would have rolled, took on the extra risk, been like, hey, geopolitical events, we're fine. Like we're gonna, it might not bounce, but it ain't gonna go down any farther. This was the risk. It's fine. We're fine. But something like that where it was just selling, most people, there's a lot of people that are like, oh yeah, we'll bounce back on Monday. I don't think so. I think it's more likely that we have a 1% down day on Monday than a 1% up day. And honestly, I think we could end next week significantly red. I think we could be another 3 to 5% down from here. I think we could be down to 7,000 by Friday. Like realistically, I think we could. So, in order to make back all the money I lost, what I did was I flat rolled. I broke class, case of emergency, and I have this is how I've set up my trading account, my whole investment portfolio to be able to handle something like this. And honestly, I could have ate the loss, not the end of the world. I just physically, when I have this option, I like to do it because it's just more patience, instead of just eating it. It just basically will shrink my pie a little bit, so I have a smaller pie to work with. But yeah, so anyway, I flat rolled. I had a 165p on coin that was expiring on Friday. That was in the money. I flat rolled that all the way out to February. So we are out, what, 7 months? We flat rolled that 7 months. So now we have that 16,500 tied up for 7 months. Not great, but I've set up my account to where I can handle a portion of that. I've done this before. I actually have one that I, 8 months ago, I did something similar, where it wasn't as bad, but I flat rolled a dual. So I had dual, if anybody knows dual lingo, that thing is just freaking tanked. And I got caught underwater on a cash secured put, and I just rolled that out 6 months to get it down to 100. So we're at 100. We're over 100 now, and that's coming due in a month. So we're going to be pretty close. Even if it gets under 100, I can flat roll it out for a month, But the flat roll is a good thing. Just rolling out, buying myself time. I got more money, so that by flat rolling it 165p to 165p all the way out to February, it covered all my spreads that I had to buy back, plus I got a credit of $159.38. So, so technically, for the starting of week 3, we made $393.94. But we locked up a portion of the trading account for 7 months, which is fine. You guys see what I do on cash secured puts. I don't go crazy. So like, yeah, we're gonna lose out $30 a week, 30, $40 a week. We can make that up other places. I'm not concerned about that. And like I said, we'll get some of this back. Like, you guys don't even know with the duals, that's gonna come back. That's gonna be another 10 grand. We're good. So, but like, this is how is important. My biggest thing is anybody getting into trading, your number one thing should be your long-term accounts. You should have enough in your long-term accounts where you could lose your whole trading account, and yeah, it would suck. It would definitely suck, but it don't matter. And that's how I have my stuff set up. I run my wife's retirement account. I run my retirement account. We have multiple long-term accounts that are in brokerages that are cash accessible, but they're designated. Since we're self-employed, we don't have 401ks, all that shit, employer sponsored, all that crap. So we're limited on the retirement side, so we got a safer retirement and the taxable side. But all those are long-term. And then I got my short-term trading account, and that's a lot of cash, and a lot of it just sits in cash right now. And it sits in cash. I sell spreads, I sell cash secured puts, and I get the 3.5% or whatever the money market's paying on interest, while for just sitting in cash. So we got to tie up a little bit. Not the end of the world. And like I said, honestly, it would definitely suck if I lost everything in the trading account. But on top of, I still got all my long-term accounts. That never changes, or that never gets touched. Every Monday I buy. I mean, shit, SPX could be up 80% on Monday, and I'll still buy. It's all automated. So, yeah, anybody trading, make sure you stash away your long-term account. Never touch it. I mean, I got decades before retirement. So it's just, that's the most important thing. This trading I just do. I mean, could I make my life easier and just put it all in long-term accounts and just walk away? Yeah. And just every week, but I love trading. I love being in the markets. I love the excitement, and it's just extra cash. Like, could I pay my wife's car off just by saving money? Yeah. But it's more fun this way, right? So and it's a little game. Again, as much as stressful as Friday was, and just watching the thing go down the whole day, and you're trying to work, and you're just like, oh shit, what should I do? Like, it's fun, right? And that's what life's supposed to be. You're supposed to do fun stuff. So, yeah. So like I said, great start. I don't know if it's a great start, but money-wise, it's a great start to week 3. Like, it's $393.94. That's almost shit. That's twice the weekly minimum to get there. So, to get to the loan paid off. But yeah, I don't know. It's a fun week, or it's fun. And no one watches this, but I do this because I like it, and I got no one else to talk about this, so I might as well talk to the complete random strangers that don't watch it on the internet, and maybe one day you will. But yeah, so that's how my Friday went, and that's how week 3 is set up. The other thing I did to get to that $393.94 for profit on Friday is I sold. I didn't want to just go empty-handed into Monday with spreads, of course, because I love trading. But I didn't want anything crazy, because like I said, I honestly I could see a 2% down day on Monday. Like, I'm not even joking. I don't think a 2% down day is gonna happen, but I definitely think a 1% down day. But I wanted to make some of that money back, but I wanted pretty much no risk. So with how much it was down on Friday, they were paying out. I sold 10, so I got $10,000 worth of risk, but we're almost 5% off the spot after the 2.64% down day. So we're all the way down to 70.50 as the short and 70.40 as the long. And I got 76.54 for that. I just sold them for 10 cents. So after fees, commissions, we got 76.54 for those 10. That I'm not worried about. If we magically go down 4.5% or whatever that maths out to be on Monday, I will gladly flat roll that, because there's no reason that we won't see a bounce after that. Like I said, I do think we could get down to 7,000 this next week. I don't think it'll be Monday. I think we might just slow grind just a slow grind, 0.5 point, 1 point, 1.5 point every day. So yeah, it's gonna be a fun week. I'm excited. I do like the red days. I don't like 2.64% red, but that's the other thing too, is it's a new world when it comes to the markets, and I'm still adjusting to it. I think everybody's still adjusting to it, because there's so much triple leverage crap out there, double leverage, triple leverage. So like, if you think about it, like, okay, I don't know what Nvidia was down. It was down. Here, actually, I'm on my computer. Let me just quick see what Nvidia was down. Nvidia was down 6.2%. Okay, so Nvidia is a huge part of the S&P 500, QQQ, all that stuff, right? Well, just think about how many double leverage, triple leverage, long Nvidias there are. So how those work is, especially because it was a Friday, it was the end of the week, they got to clean their books up. So as the price goes down, they're waiting, and then they get to, an hour before close or whatever, and they, in theory, kind of get margin called. So they have to sell. So now they're a double long, triple long Nvidia, and it's already down 5% for the day. Well, now they got to sell to get their books cleaned up by the end of the day, but they're double and triple long, so they're selling more. So it's just a snowball, and there used to not be this crap. And I kind of like trading it for just selling premium on it. No matter what any internet guru says or whatever, do not long-term invest in any of these leverage stuff. Do not. It eats you alive. You will get whipsawed. They're short-term trades only, and for me, premium sells only. But do not be one of those guys like, oh, I'm gonna, instead of doing like QQQ goes up 10% on average every year, I'm just gonna invest in the TQQQ, the triple leveraged one, and I'm gonna hold that for 30 years. No, you'll lose more money than you will make holding. You'll lose. Yeah, actually, you'll lose all of it, because if these triple leverage stuff, like, okay, so say we have a 08 recession. Honestly, even COVID, I don't think they were around in COVID, but COVID came back fast, so they might have been okay. But say we had something like 08, they're all going to zero. Any triple leverage long, going to zero. Like, you're done. Like 0-0, you're not coming back from that. Like, they'll close up shop. So, but what's not going to go to zero in the 2008 crash? The regular QQQ. Like, you're going to lose a lot of money. You're going to lose 60-70%, but it's better than going to zero, because it's going to come back. You can't come back from zero. But yeah, so with that, there's so much of that leverage crap. So it's like not only margin, but then it's like margin on top of margin. And then you got people, I call them the degens, because like that's how I make money. I don't buy these options, I sell options. And there's all these degens that are buying these options, and they're just leveraging. They don't have the money. They got $500 in their account, and they're like, I'm going to buy a call option for Nvidia for 50 cents. Well, that 50 cents represents 100 shares, so it's costing them, 50, well, I guess they're not going to buy it for 50 cents, but you know what I mean. Like, they don't have the money to actually handle the 100 shares. So yeah, they're just leveraging that. But Friday's a great reminder and the only reason I'm in such a good mood is because I put myself in the ability to get out of it. Long-term accounts, like I said, my trading account could go to zero, still be happy. I mean, I'd be pissed, but like, I'd be fine. I just wouldn't be able to have fun in the stock market. It'd just be boring old buy every week. But yeah, but lesson learned Friday, or lesson for Friday is if you're not leveraged, don't be on margin. Have a safety net, a long-term account, cash reserves outside of a trading account. So have long-term account, what do they call it? 3-month emergency, at least 3 months. Like realistically, I think everybody should have at least, if you have a family, especially 6-9 months. I would say 9 months because then it's a 6-month emergency fund, and then you got another $15,000-$20,000 for the heater going out. So the heater goes out, cool, you got the cash for that, and you still have your 6-month emergency fund in case you lose your job, because when it rains, it pours. So, but yeah, so that's a good, like I said, Friday was a great reminder that if you prepare and you do everything right, even when you screw up and make mistakes trading like I did, you can fix them with time. Time fixes everything, and being able to roll that, like I got 7 months now, and I think coin goes down. Yeah, I think coin. Honestly, I can see coin going down below 100 in the next 7 months. But it'll be also back up above 165 within a year or two. So, yeah, no, it's just time heals everything. So, yeah, it was a great lesson for Friday. Just if you build your base and you trade with fun money, money that you can lose, then you're set for life, man. Like I said, I don't have to do this. I do it for fun. It's when you're married and have kids and all your friends live a couple hours away and you work 80 hours a week and you don't get vacations, you got to have a little enjoyment. And I don't drink, don't smoke, don't do drugs, all that stuff. So gambling, and I don't gamble on the casino or sports betting or anything, and some people would say this is gambling. I don't think how I trade is gambling. There's plenty of people who do gamble trading, but when you sell premium, you got set risk and everything. So anyway, I'm rambling. Hell of a week. I think we're like 4.58% of the way there after 2 weeks, and even though we blocked off a little bit of our trading account, we're already $393.94 on week 3. So we'll see what the week brings, and can't wait to go into week 4, and we'll see you when we see you. Subscribe.